the next session by Mr. Haryat Budiman. So please welcome Mr. Haryato.
Good morning. Hi, Ida.
Hi, how are you?
I'm good. I'm good. You can hear me well?
Yes.
Okay, excellent.
So let me introduce Mr. Budiman to the audience. Mr. Budiman is the Managing Director of Compliance and Risk Management, Managing Director of Bank BCA. Mr. Budiman, Managing Director of Compliance and Risk Management for BCA. He started his career in finance as a business analyst, then associate partner in McKinsey company for more than a decade. He has then worked for Bank Mandiri as Senior Executive Vice President and the CEO of JP Morgan Indonesia. Currently, he is the Executive Chairman of the Indonesia Banker Association. Mr. Budiman received his PhD in Aeronautics from Massachusetts Institute of Technology, a master's degree in Engineering Mechanics from Virginia Tech, and bachelor degree in Aerospace Engineering from Texas A&M University. Without further ado, welcome Mr. Haryato to the floor.
Okay, thank you again, Ida, and thank you to Permias Nasional for inviting me. I think I would say good evening to all of you in the US and good morning to all of you in Indonesia. I've been asked to talk about financial services in Indonesia, and the topic of my presentation this morning will be the banking sector in Indonesia, where I'll talk about current challenges as well as opportunities ahead. Let's go to the next slide. There are three things I want to talk about today. The first one is about the challenges. The second section, I'll talk about the brighter side, the opportunities in the banking sector. I talk a little bit about a case study of BCA. And then last, I will share about the key takeaways. As a context, there is a historian, a famous historian actually in Columbia University. His name is Adam Tooze. He recently wrote the following. He said, this is the period of radical uncertainty, which is an order of magnitude greater than anything we are used to. He said it would be foolish amid such uncertainty to make overly confident predictions about how the world is going to look like in 5 years, or even in 5 months. As you know, everything is changing so rapidly right now with the pandemic, and what he said is actually highly consistent to what we are saying on a daily basis here. If you go to the next slide, please. What's going on right now is actually the ongoing tension. This is the framework that was developed by McKinsey, in which McKinsey said basically there are two ongoing tensions. The first one is about safeguarding lives. In safeguarding lives, you know that the first thing that everybody wants to do when the pandemic actually started is to try to flatten the curve, suppress the infection, flatten the curve. The second thing they do is to try to increase the capacity of the hospital, as well as testing capacity to allow for more people to be tested. And the third one is actually to try to find the right medication and also to find the right vaccine. So first imperative is about containing the spread of the virus. The second imperative is actually about restoring the damaged economy. Why is that the case? Because when you try to suppress the virus, the economy actually will be in a sudden stop. As you can see, there's going to be a decline in GDP growth globally. And for that reason, I think government around the world try to lessen the burden that is currently being felt by people mostly affected by the pandemic. Basically, the working poor as well as the SME clients, so people like that. And then government also needs to figure out what to do to restart the economy and also to accelerate once the virus is actually under control. Under control does not mean that the virus will be completely eliminated, but what I mean is basically the spread is actually under control and can be managed by the respective jurisdiction. If you go to the next slide, this is the chart taken from JP Morgan Research. And in here you can see that the current pandemic, the 2020 pandemic caused by COVID-19, the drop in the global GDP is actually a lot worse than what we were experiencing in 2008 and 2009 financial crisis. You can see that we are only second to the decline in around 1945-46, the post-World War II era. So this is actually quite severe. This is impacting every single country in the world without exception. And the size, actually, the drop is humongous. If you go to the next slide. Now, this is a very interesting comment made by Muhammad El-Erian, Dr. Erian. He is currently the chief economist advisor at Allianz, and also formerly he was the CEO of PIMCO. He said something really interesting. He said that this crisis is actually very, very different than the one that we're seeing, that we saw in the past. He said in the financial crisis, like what we experienced in 2008, 2009, and also what we actually experienced in Indonesia in 1997, 1998, the problem always started in the banking sector. There is a crisis of liquidity, and he basically has an analogy here that the banking sector is like the heart. Okay? When the heart is damaged, the first thing that needs to be done is to pump liquidity into the system. That is exactly what happened in 97, 98, what happened in 2008, 2009. The problem with the current pandemic is that it is very, very different. It doesn't start at the banking system, because the whole thing started because of the sudden stop in the economic activity. So the analogy he was saying is, imagine that somebody actually is injured on the leg, or there is an infection on one of the foot, and then also the infection actually spread all over the body. And at some point, if left uncontrolled, this could also impact the banking sector. So he's saying that this is actually very, very different than what we have seen in the past, particularly when it relates to the two crises I mentioned earlier. If you go to the next slide, please. McKinsey developed a simple framework to define various economic scenarios post-COVID-19 pandemic. If you look on the horizontal axis, it is basically an axis that shows how effective is the government intervention. The far right shows a situation where the government intervention from the economic policy standpoint is highly effective. On the left side is highly ineffective, and in the middle is actually relatively moderate. The y-axis actually shows how effective the government managed to control the pandemic. Okay, the top part there basically is highly effective, managed to control the pandemic. The bottom actually is highly ineffective. The pandemic cannot be controlled. And the one in the middle is pandemic was able to be controlled, but then there was actually a second wave or resurgence of the infection. Now in here, as you can see, nobody is now talking about V-shaped recovery anymore. Nobody is talking about V-shaped recovery. If you recall, at the beginning of the pandemic, everybody was still very confident that the recovery will be very, very fast and quick. Not the case anymore. People don't talk about U-shaped recovery anymore either, right? What people are saying now is even something a bit scarier, because they talk about K-shaped recovery. Clearly, it's stock market in the US, S&P 500, NASDAQ, Dow Jones, they have actually already recovered. So pretty, pretty well on the recovery path. But then the real economy is still struggling. That's why they talk about the K-shaped recovery. The question for us, which path will Indonesia follow? Right? It all depends on these two parameters that I mentioned earlier. If you go to the next slide. Now, the GDP of Indonesia has contracted in Q2 2020, and the contraction is actually across the board contractions in all components. Right here, as you can see, typically our consumption in Indonesia grows at least 5%, but then in Q2 it is actually also 5%, but it is negative 5%. Right? Sluggish domestic consumption, slow government spending, weaker investment, as well as external trade. So a lot of people are asking what's going to happen in Q3. Are we going to have another negative growth? Very likely. I think the Minister of Finance has already announced that very likely we will actually have another negative growth, but hopefully it's not as severe as what we've seen in Q2. And the projection is the best scenario for us is to have zero growth in 2020, which is still much better than many other countries. Next slide, please. Now, furthermore, the low interest rate environment is actually putting a lot of pressure on bank margin. I think you can see on the chart, the left chart there, Bank Indonesia has lowered the benchmark rate by about 200 basis points. On the right-hand side, you can see that the sector net interest margin actually is declining. Now, before we move on to the next slide, let me say a few words here. Government has done a lot of preemptive measures when the pandemic actually started. I think we are actually very pleased to see the actions taken by Bank Indonesia and OJK. Bank Indonesia immediately decided to lower the benchmark rate and does a lot of this relaxation on the macro-prudential measures. On OJK, they actually try to have a lot of relaxation on classification of loans to actually help in the restructuring of loans across all segments. In the next slide, if you see there, the restructured loans actually has jumped quite a bit, almost 4 times since April 2020. Now it has reached about 15% of the total sector loan. It could even be a lot more than that. Right? Because if you look at the data before, if you look at the chart in the bottom, there is an example of what happened in the top 12 banks, and clearly there is a massive increase of the restructured portfolio, and we need to do this restructuring in order to help the clients and also in order to prevent the facilities to go sour and finally downgrade it to non-performing. Next slide, please. Now, what is interesting from this pandemic is, in the past, any analyst, any good banking analyst, when they try to analyze the performance of any banks in the world, always look at the so-called non-performing asset or non-performing loan. Unfortunately, with all this, what's going on right now, it is actually not that relevant anymore to simply just look at non-performing loan. We need to look at the so-called loan at risk. Loan at risk is nothing but a combination of non-performing loan plus special mention loan or category 2 loan plus the restructured loan. Restructured loan that is categorized as collectibility 1. So as you can see in the chart here, there is a significant increase on the loan at risk from 2019 to the level right now. In the past, it was hovering around 9%. Now it is already around 22+%. And if you look on the right-hand side, this is actually the loan at risk for various Buku 4 banks. Buku 4 banks are the biggest banks in the country, and they're all hovering above 23%, and industry is around 22%. So clearly, this has an effect on the loan at risk. The NPL can still look benign, but the loan at risk is significant. And I think, hopefully this loan at risk will not be downgraded further to become NPL. We will only know once the relaxation measures have been removed. Next slide, please. Now, those are basically the challenges, right? Now I want to talk about the brighter side, about what's really going on. What is encouraging is the great activities, the great policies introduced by the government, whether it is Ministry of Finance, whether it is actually the central bank or OJK. And they're trying to address both the supply side as well as the demand side. If you look at the demand side, you know what's going on right now, right? Government provide a lot of stimulus, as well as trying to actually introduce the so-called cash transfer to the people that actually need it. And then on the supply side, there is a lot of things about, for example, if I can see here, is SOE support, various tax incentives, loan restructuring that is currently being done. And then on the banking sector, we are all doing restructuring. We're trying to help our clients across all segments in order to allow them to survive in this environment. And then, so this is basically all the players in the industry actually come together trying to actually help the whole economy, right? Whether it is the government, the regulator, the central bank, as well as the private sector, including the banking system. Because this is something that needs to be done. Government has allocated 695 trillion of stimulus, including in their interest subsidy to the MSME segment, micro, small, medium enterprise segment, guarantee scheme that will be provided to the MSME segment as well as to the commercial segment and to some extent also to the large corporates. So everything is done to actually help the economy. If you go to the next slide. And what is another thing that is promising is because a lot of people have to stay home, e-commerce is growing very rapidly. And you can see here from this chart, the growth is phenomenal compared to years before. And simply because people now have to get accustomed to using mobile channels to interact with the banks, to do transfer, to do payment, and banks will be the enabler in these particular activities. Next slide, please. Now, many banks have improved their digitalization initiative, right? And if you look at it there, I show 3 examples. First one is BCA. We actually allow remote account opening, and every single day, 5,000 to 6,000 new accounts is being opened remotely. And then we actually improve our internet banking as well as mobile banking capability, and also connecting with all the relevant fintech for payment. And the same thing is done for Mandiri. There's some examples there in Mandiri as well as BRI, where BRI also set up some ecosystem for their micro SME segments as well. So banks are actually preparing themselves as well in order to help the clients, particularly to face the challenges here through digitalization. The future of banking, I think I was asked to also talk about the future, is about connectivity and collaboration, right? No doubt that Indonesia is a fast-growing, in Indonesia there's a fast-growing segment of the millennials entering the bankable market. And these millennials, they are very used to digital service offering. And fintechs will continue to grow. What I'm talking about fintech here is not necessarily the P2P fintech, because person-to-person lending is currently really struggling, because when the crisis actually hits, they actually got hit pretty hard. But in the future, you can see from these examples that it's about ecosystem and about connectivity, where banks have to collaborate with many other players, right? There's many examples there. I don't want to go into too much detail. The next one is a short case study of BCA. Go to the next slide. We were actually founded in 1957. We are currently one of the leading banks in Southeast Asia. If you look at our market cap as of Friday last week, our market cap is around 47 billion. If you compare that with a regional bank, for example, DBS is around 37 billion. So clearly it is one of the bigger banks in the Southeast Asian region. If you go to the next slide, there's a history of our digital journey in BCA. Started in, I think if all of you probably recall when you were growing up, that you always know about ATM BCA. In the past, everybody is opening an account with BCA to be able to transact using ATM. We expanded offering again through the so-called EDC and debit offering, through mobile banking to internet banking, whether it is internet banking for individual or for corporate. And nowadays we are talking about payment link with all the fintechs and also APIs and things like that. So clearly this is an endless journey that we are actually embarking right now from the very beginning. The digital transaction has grown very rapidly. I think you can see here, in the past, people go to branches or people use ATM. And now it is very interesting if you look at the slide here. Mobile and internet has been growing very rapidly. ATM transaction has been on a decline. That's very clear on the left-hand side. And also branch transaction, number of branch transaction also going down. And the transaction value, again, it's very interesting to see that although mobile internet transaction value is small, the sheer number of transactions in mobile banking and internet banking is just so much that it has already undertaken or overtaken the total value of transaction through the branches. Because people still go to the branches for bigger transactions, but overall, all in all, clearly, mobile and internet have already surpassed that. And for us, the digital value proposition for the bank is number one, of course, is security. The second one is convenience. We need to have something that is very quick and high speed to actually execute the transaction, has to be precise, and has to be low cost. So those are our digital value proposition. And the efforts has actually translated to numbers. And you can see here that our current account and savings account ratio, we managed to keep it at 75.6%. Our current account and savings account have grown consistently over the years. And this is being helped by the fact that we have a well-integrated channels from mobile banking, internet banking, connected with so many of our clients through APIs, and so on and so forth. So clearly this is something that is actually paying off. Next slide. Now this is very interesting, okay? I don't have time to show the video, but let me just summarize it here. First half of 2010 on the left, upper left corner, ATM transactions dominates. As you know, in the past, when people transact with BCA, they always use ATM. And then that still continues until the first half of 2015. So ATM transactions still dominates. But look what happened in October 2019. The number of transactions through ATM is already the same as the number of transactions through our mobile banking. And then in June 2020, mobile banking transactions have already overtaken the ATM transactions. So that clearly shows that the future is not, it's going to be very, very different than what we are seeing right now. So digitalization is really going to be the thing of the future. Now, this is my last slide that I want to share with you. Let me summarize what I said earlier. First of all, COVID-19 pandemic has resulted in the biggest global GDP drop since World War II. Some sectors are more negatively impacted than others. Point number two, to soften the pandemic impact, governments around the world, they are trying to address the two issues at once. Issue on how to safeguard our lives, how to control the pandemic, how to control the spread of the virus. And the second one is how to safeguard our livelihoods, which is how to ensure that economic activity continues to flourish. The third point is fiscal stimulus that have been introduced by the government, including cash transfer, credit guarantee scheme, interest subsidy, tax breaks, as well as monetary stimulus by the central bank, including liquidity injection, interest rate reduction, reserve requirement, etc., as well as from our regulator, OJK, which is relaxation, actually introduced by almost all countries, right? Not just in Indonesia, but also in many other countries. Now, the good news is the banking sector, in general, globally, enters the pandemic with a state of strength because the capital base and the liquidity are already quite strong. Partly, this is due to the fact that we experienced 2008, 2009 financial crisis, and regulators around the world have tightened the regulations. That's why bank is actually in a decent shape. Having said that, we need to be sure about a few things here, right? Like I mentioned to you earlier, loan at risk is actually increasing. And this is something that we need to watch out for. And that will certainly result in a significant increase in loan loss provision as required. Second point is net interest margin continued to be compressed in all segments, primarily due to two things. One is lower benchmark rate. And the second point is due to loan restructuring effort that we are doing. Because in loan restructuring, quite often we reduce the interest rate or we defer the interest rate. And that actually is going to result in a lower net interest margin. And unlikely the net interest margin will recover anytime soon. The third point, the third challenge actually is muted loan growth. Because this loan growth depends on the economic recovery. If the economic recovery takes longer, we cannot expect loan growth to be significant. However, there are still a number of silver linings. Silver lining number one is bank is generally in a much better shape right now, well capitalized with ample liquidity. Previous investment for digitalization have shown to be paying off. You saw from the charts I showed earlier, more customers switching to mobile channels rather than using traditional channels. New competitors are emerging. This is not the traditional person-to-person lending players, okay? Not the P2P players. But this is more like tech companies. They are getting more and more aggressive, getting into the financial services. That's why the use of AI, machine learning, big data analytics, blockchain, by banks will just continue to accelerate going forward. In the future, winning banks are those that are actually part of a larger ecosystem. That's why banks must prepare both the hardware, the technology aspects, as well as the software, the human capital, the capability, the know-hows of its employees. That summarizes my presentation. Thank you.
Mr. Haryanto. Now we are going to kick off the Q&A for today's session about the financial services. That's super insightful. Probably I will kick off with my own questions regarding the loan at risk that it seems projected to be spiked post-relaxation. What is exactly like a financial services mitigation plan when this happens? Like when the post-relaxations happen and then it will hit the bottom line of the bank, what is actually like, let's say we see example toward this kind of situation from the corporation angle and then the consumer facing and relationship management with the consumer?
Yeah, it's very good questions. As you know, OJK introduced relaxation measures, which basically allows banks to do restructuring and then classify the restructured portfolio directly as collectibility 1. Collectibility 1 means performing, or in Bahasa means lancar, right? The problem is we cannot simply put it in collectibility 1 without putting enough loan loss provision. I think banks that are prudent will still put some kind of loan loss provision depending on how comfortable we are on the viability of the restructuring. Because if you look at the restructured loan portfolio right now across all banks in the industry, some of the restructured portfolio will survive, will not require second round or third round restructuring. Some will require a second round restructuring or even third round of restructuring, and some will just simply fail, right? Will become non-performing. Then for us, we need to anticipate all these scenarios and put the right level of loan loss provision in there, just to anticipate it.
Okay. Thank you so much. And we will have one question from YouTube. So it's from Aprisel Malale. Thank you so much for your presentation. What is BPA current strategic plan to reach mobile phone user in marginalized communities, especially where physical banking is not available?
Yeah, it's very good questions. As I mentioned to you earlier, we actually are developing the so-called opening the account opening remotely, right? The biggest challenge for us to tap into the remote communities is internet connection or mobile connectivity, because you can open an account anywhere, even in the places where we don't have branches. You can simply go and do this remotely through internet. But if the internet is not available or if the mobile network is not there, of course it's going to be a challenge. I think we need to work together with the other stakeholder, in this case the mobile operator, to allow connectivity, because the better connectivity we have, the more we are able to reach to this underserved community.
Great. And the last one from Dwiki Pratama. What do you think is the best thing to do to increase financial inclusion and getting more people to participate in financial markets in Indonesia?
I think the best thing to increase financial inclusion is to ensure that people have bank accounts. I think if you look at the number of bank accounts in Indonesia, it's still much lower than the number of mobile phone numbers. Right? People have more mobile phones than bank accounts. So the key is to actually have access, allow them to have access to banks. Because if they have access to banks, not necessarily by opening a typical, standard savings account at the branches, because branches, as you know, are still very limited. Even the bank with the most number of branches like BRI doesn't have branches in every single location in Indonesia, right? It's quite remote. Indonesia is a big country. That's why having this access to these clients, very, very important. They need to first come into the banking system by having a bank account, and from there on, then we can have more interaction and transaction with the clients.
How do you actually foresee this kind of the e-wallet, like the new fintech company that, you know, have a mission to boost the financial inclusion as as a, as a collaboration partner or as competitors towards the incumbent?
Yeah, it's a good question because in the past, all banks are really scared of this fintech, right? They are really afraid of this fintech, whether it's actually payment fintech or P2P, person-to-person lending. I think with the payment fintech, we are actually working closely with them. We actually are facilitating, for people to actually top up the money in there, in the fintech account, in OFO or in GoPay. I think it will be part of the thing in the future, right? People will like to have this kind of wallet, and clearly cooperation with the banks is still very important. On the P2P, I have to say that this is still going to be challenging in Indonesia. The business of P2P, as you know, is not easy even in the US, let alone in emerging market like Indonesia, where credit scoring is not readily available, and the credit bureau is not the same quality as that in mature market. So, plus, as you know, there's also an issue of single identity number. Unlike in the US, you have social security number, one ID for every individual. In Indonesia, that's really not the case. So I think with P2P, I don't see it as a major competitor because we have a totally different business model and different business risk appetite. But I think with the payment, we will continue to actually cooperate with them. I think their business model will also evolve, unlike in the past, right, where they are able to give a lot of discounts for people using their product, but going forward it will be very different.
Okay, thank you so much, Pak. Really nice to have you here, and hope you have a wonderful and restful weekend.
Thank you
so much.
Okay, thanks for inviting me. Bye bye.